Brian Brenberg joins us right now. Brian, we got about 6 million people looking for work and 11 million open jobs. The math doesn't work. What's going on here?
Two open jobs for every one person looking. It's good to have open jobs, okay? No question about that. But the problem right now is businesses are frustrated to the max by the fact that they can't find workers. We still have so many workers sitting on the sidelines right now. If you look at a number, labor participation rate, it's lower today than it was before the pandemic
Roughly
started.
62%?
That's a problem.
62,
yes,
61?
Exactly. About a percentage point lower, which means we're about 3 million jobs behind where we should be. Businesses feel that. They're having to raise wages to try to get workers in the doors, but that keeps pushing inflation higher. That makes the Fed's job harder, which means they're going to increase rates more. That's where that recession risk comes. We're sitting on the brink of a deeper recession because of this issue.
So, Brian, what changed besides the pandemic? I mean, this was not the problem in 2019.
No, we did not have this problem at all. But the government has handed out so many benefits, one on top of the other,
Rent forgiveness
over the last 2 years. And the latest now is student debt handout. All of these things pile on, and they keep people on the sidelines. That's why businesses are sitting here saying, I'm hanging a shingle out. I'm trying to get workers. I can't convince them to come in because I've got to pay them so much to make up for all these benefits at the beginning.
Right. So when you look at what we can expect, we had a surprising number of over 500,000 jobs the last job period.
Yeah.
Now we see some are expecting 300,000 on Friday. Is that what you're looking at?
I think it's going to be a little lower than that. Some are saying higher. I think it's going to be lower because I'm seeing signs that this labor market's cooling a little bit, and I'm getting really nervous about the Federal Reserve increasing interest rates again. It's going to make things much more costly for people. They're trying to slow down the economy. Eventually, that feeds into businesses saying, you know what, I got to pull these open positions because if I keep them up, I'm not going to have the demand for my products.
All right, so we understand, too, there's about 5.67 million people looking for jobs and 11.2 million job openings. But let's take a look at the millennials. Millennials have been getting poorer, you say, since the last recession, while other age groups have become wealthier for up to 60%. Why is that?
Well, what's so interesting, and this goes back to student debt again. I mean, you think about millennials and how much they paid for college. College costs are way too high. That eats into their ability to build wealth. Plus, older generations over the past several years, because the stock market has been up, benefited from that. Younger workers didn't benefit from that. But the problem here is millennials are saddled with the debt. Nothing we're doing right now is dealing with that core problem. The student debt handout isn't dealing with the cost of college.
The interest rate on that debt is way too high. It's almost predatory.
Well, it is high. The principal balance is too high. I mean, there's just too much of it, period. But instead of throwing away the debt, we should be talking about why colleges aren't delivering value and overcharging. And the answer is because government's handing too much money.
But I will say there are affordable colleges out there, not easily, much more affordable. You just can't go to a $70,000 a year school.
You got to go to school that preps you to earn the money to pay that debt.
That would make sense. Brian, thanks so much. All right, meanwhile,
Subscribe to the Fox News YouTube channel to catch our nightly opens, stories that are changing the world and changing your life. From Tucker Carlson tonight.